How's everybody doing out there? I'm hoping that we have some audio for you guys this time around. Please, please tell me that we have audio this time around. How's everybody doing? Welcome to Ready Set Live here with Ready Set Crypto. I am Doc Severson, and off to this side over here is...
Hey guys, it's Mev.
All right. So if you guys could, let us know if you make sure you hear, if you hear audio, let us know. If everything's working up, give us a good old thumbs up. Let us know where you're coming in from tonight. And all right, Mr. Penguini, good to see you, sir. All right, so at least we have audio, at least the music. So let us know if the microphones are coming through, and we'll be happy with that. So interesting day in the markets today. We have a lot of things going on here, and it's not, for once, it's not just crypto. It's the overall market right now is very, very unstable. What we've seen is the equity markets have just been bouncing up and down, bouncing up and down. All right, so Austin's coming in from Santa Cruz, Crypto Darthmark. We must have audio because people are telling us audio is good. Okay, awesome. Thank you. Yeah, I did a Windows 10 update the other day, and apparently it stripped out all the audio inputs on our streaming service. So, oops, sorry. That's no excuse. There's no excuse for that. No excuse for ineptitude like that. I apologize. I'm sorry if I wasted your time before. So anyway, we got a very unstable market going on right now, and not only, and it's been interesting because crypto has been inversely correlated to the equity markets, sort of, lately. And but gold has been just going on. So I think Mav will have a little bit to say about gold in a minute. But all right, we got New York, we got Calgary, Alberta, we got Florida. What are you seeing out there, Mav?
Yeah, so one of the most commonly cited characteristics of Bitcoin is its uncorrelated nature with conventional asset classes. So, recently the correlation between Bitcoin and gold has, people have been talking more and more about it as a global hedge, as, potential, hey, this is actually digital gold, really cool, awesome. But we're still in that transition period. We're still, there's still a lot of oscillation in terms of that ratio of gold to Bitcoin, and people know people know what gold is. People are still trying to figure out what Bitcoin is and what the overall blockchain space is. So there's going to be some volatility. There's still a lot of uncertainty right now. But we kind of talked about this during this week's Omnia call with our members, and it's really, we're entering a new sort of phase, a new economy, a new overall global market, and the macro hedge that Bitcoin presents, and really a lot of the other crypto assets out there, cannot be overstated.
Hey, Bev, you had an awesome article in yesterday's free newsletter about exactly what you're talking about. So,
yeah, that's a good segue.
No, it was an awesome. So, if you guys are not on the free newsletter yet, get yourself over there, get to our site and sign up. Do we have a link for anybody that's in the description?
rscnewsletter.com, but yeah, it should be in the description.
Okay, so it's in the description. So it's free. It's absolutely free. So get yourself into that free newsletter and you can have the wisdom of Mav on a nightly basis. All right, sorry for the interruption. Go for it, man.
No, it's good because staying informed with the space is definitely important, and it's there's also just a lot of garbage out there, and I'm the garbage man. I guess. Oh man, that was really bad. That was really bad. But what I do is I just try to sift through that every day and try to find what is actually important. What are the news stories that you should be paying attention to? Yeah, it's a fun job, I would say. Cool. We got a good audience tonight. I'm glad. Again, yeah, I'm sorry about the technical issues earlier today, guys, but thanks for coming back on if you were there earlier, and hello if this is the first time you're seeing us today. But yeah, it's I think we're okay right now with the space, the market. there's a lot of fear right now. If you go check out the greed fear index, it's at 11, which is pretty much the low. Peter Schiff is saying, "Oh, Bitcoin is never going above 50,000." Um, like these are all the indicators I need to know that we're okay. There doesn't seem to be any like fundamental reason why the market Bitcoin is selling off, other than just uncertainty and just like sort of this trepidation of like, okay, I'm trying to hedge against the market, but the market's doing okay, or the equities market is doing okay. So I don't really know. Maybe I'm gonna go play that right now while I wait for more uncertainty to enter the market. We're just in a holding pattern, and that's kind of defined this space, I think, a lot over certainly the last couple of years, but since its inception, is that we go through these cyclical, like, it's that's its nature, is like it goes, it's boring for a bit, and then things heat up, and then that's when you obviously want to be in. But like, this is the time right now when the market's uncertain, there's fear, there's no fundamental reason why the market's selling off. This is the time to accumulate, or at least like consider your options, and play against the market. But bear in mind, do not be contrarian just to be contrarian. I know that Warren Buffett quote about like, buy when, be greedy when others are fearful, and greedy. I don't know. It's a nice little.
Well, everybody is like, be greedy when everybody else is greedy, and be fearful when everybody else is right.
Yeah. It's a nice fortune cookie wisdom type stuff, but understand why people are greedy or why people are fearful. And I think right now, understanding why people are fearful in terms of just the macro perspective will help you be greedy in the right ways.
All right. I'll tell you what, I'm going to drop a little bit of charting on you guys, if you don't mind. Yo, okay. Yo, okay. So here's BTC USD. Sorry, Mav, you can't see this, but what I'm seeing here is like I'm seeing two different things at once here, and this is what I put in tonight's newsletter. For those of you Omnia folks, there's two things going on here. So here's the bearish side of things. We do have a head and shoulders pattern. Now, I'll tell you what, I haven't seen a head and shoulders pattern work out for years. And it's usually because everybody sees them, and as soon as everybody sees them, the jig is up, right? They just don't work out. But that is a bearish pattern, and the downside projection of that is basically the same as this distance from the neckline up to the head, and that would put it down to 4,000. Uh-oh. Okay, so I'm not saying it's going to go down there, but keep an eye on what's happening here. So the other thing that's happening at the same time, and this is what I think is fascinating, is that we have this little decision box that's right up in this area. So we could actually see a massive higher low, higher high. This is what I call a trap set up here. I would give the nod towards this type of outcome right now, just simply because if I go back to the weekly chart, where's the weekly chart? The weekly chart's just in consolidation, man. It's just consolidating. It's on a big uptrend right now, and it's digesting that great big meal that I ate back around the June timeframe, and it's still trying to squeeze it in there, And so what happens is range expansion goes into range contraction, and so this is why we're seeing this. And we're almost at the point where this thing is ready to move in a big way. And when we have both the daily and the weekly set up like that, you're going to see some pretty big movement. So sometimes what you will see, and this is the last thing I'll say on this, sometimes what you'll see is you'll see kind of like an undercut, and then it just absolutely rips like that. So markets move because they have to. Let me get the right screen on here. Markets move because they have to. They get too many people pointing in the right direction or in the wrong direction, and then they pull the rug out from underneath them. So this is actually what I'd like to see happen, is a quick little undercut of that trend line, and then all of a sudden some catalyst will come along, and it may be Jerome Powell on Friday, because Jerome Powell is going to speak at Jackson Hole, Wyoming. And this is what Ben Bernanke did exactly 9 years ago. He stood in front of the microphone and issued two words. He said, quantitative easing. And everybody at the time said, huh? What? What did he say? Did you hear what? What? And it took us a number of months before we were able to understand really what they were doing. And here it is years later, and we've completely distorted the market. So anyway, I'm seeing some interesting patterns of Bitcoin. It could go either way. The issue here is not to buy into one direction or another. Keep yourself loose. Understand the two different possibilities here, and understand what you'll do if it goes up. Understand what you'll do if it goes down. That's the best way to handle things.
Yeah, to me, it's always you always have to keep the macro perspective in mind, and quite honestly, Bitcoin performs very poorly around equity market volatility measured by the VIX. It happens to coincide with a break in the Bitcoin gold relationship, and we've seen that where like the spike in Bitcoin in 2017 was around a time of historically low market volatility, the equity market volatility, and conversely, the VIX spikes in Q1 and Q4 of 2018 also coincided with a very substantial decrease in Bitcoin's price. So, guys, we're inversely proportional, or sorry, inversely correlated a lot of the time in terms of price. Bitcoin is, but a lot of times we are also subject to the larger market forces. There's no market out there, unfortunately, that is completely siloed away from being participatory in the larger markets, and I think that's okay. We're moving towards being part of that global market, being part of that global conversation, and so we get all the positives and negatives that come with that.
Apparently, I'm a little too bright. Did you know that? That's the first time I've ever been told that I'm too bright.
Oh, man. Yeah, I was saying it like I'm the dark side over here, and we got the dock side.
Yeah, the dock side. Yeah, wait till I go out in Bali. So like we're going out to Bali in a couple of weeks from now to go through the altcoin mastermind event, and I'm going to be like, reflecting light onto everybody at the beach. I mean, that's my job. Like, like
We're gonna be a couple of lobsters.
yeah. There we go. Yeah, I shut some lights down.
Oh man.
Um, let's see. Chase Gordon has got a question, so we'll take your questions here. We're gonna try to. I know it's getting late for a lot of people out there, so we're gonna keep this one short and sweet. And I'm moving starting tomorrow, which is pretty cool. I'm moving to South Carolina, so I'm following the sun. Chase, I'm a rookie in the crypto space. It seems that CME futures and the SEC put the brakes on crypto since 2017, and the market is heavily manipulated. Okay, so there's a lot that's going on there. First of all, the CME futures really are not that liquid. They do not dictate the crypto market. In many of the markets that are out there, say it's like the S&P futures, the S&P futures trading is so heavy that it basically pushes around the S&P 500. It has become the de facto underlying for the S&P 500, the S&P futures contract, which is traded in Chicago and also through Globex. But the Chicago pit's the one where you see all the guys making the hand signals and everything like that. But with crypto and the CME futures, look, first of all, they're institutional futures. Nobody on retail is going to trade it because each contract is worth 5 BTC, which is nuts. And they just aren't liquid enough. They just aren't pushing the market around. So don't worry about that. There's a lot of people that are out on Twitter and social media, looking for bad guys that are out there and like, oh, there's a bad guy over there. Let's go pick on him. And it's just not the case. And what you'll find is that every financial market that's out there is manipulated. Now, what does that mean? That means that there are people that are bigger than you and I that are they're running a fund or pension fund or a hedge fund or something like that. They're controlling billions of dollars of capital, and they're trying to tiptoe in and out of positions. And if they can move the market around to suit their customers, they will do so. Every financial market that's out there is manipulated. The key, though, is that you can't do it for very long, right? You can't do it indefinitely. You're not going to be able to corner a market indefinitely. So yeah, you might push it around for a minute or two, and that's about it. And then all of a sudden you leave a vacuum and it gets sucked right back in. So there's not one market that I trade which is not manipulated by somebody much, much, much bigger than I am, or for that matter, just about any retail trader. So you get used to it. It's like, little fish swim along next to whales and sharks and things like that, and the sharks are not going to sit there and eat them. They coexist, and that's what we do, is we coexist with the larger fish that are in the ocean. I'm on the wrong side of the screen. I don't get it. What have I done?
Yeah, maybe when I was pointing at you earlier, I should have been
Oh
pointing
yeah, like
that way.
yeah, like would it be cool if the finger actually went? Yeah, there we go. Let's see, crypto. Did I sell my 10K puts or waiting until better price? Well, I sold them to open. Well, let's be correct here. I sold them to, I have to be didactic about this. You sell to open and you buy them back to close. And so I have a couple of positions open right now. I'm trying to buy one of them back because I'm not real happy with it. And the price has come down a little bit harder than I wanted to. I saw the rising wedge and said this would be a good time to take profits on this one. Unfortunately, I was not able to get out of it. So I'm still holding my 10,000 strike put. There we go. Any other questions for today? Oh, by the way, there's one thing I wanted to bring up here was, let's see if I can get back to the screen. There we go. Look at the fear and greed. So Mav made mention to the crypto fear and greed. 11. On a scale of 1 to 100, fear and greed is at 11 right now. I mean, it doesn't get much lower than this. It was 13 last week, and now it's 11. So we're just about wall of worry time. And look at this. We have the S&P 500. Markets are within 100 points, which is not very much, of the all-time highs. And right now, the equity markets are showing extreme fear. What's wrong with this picture, right? What's wrong with this picture? So we have some really odd things going on out there. And it's likely, usually when we get into fear like this, usually markets will climb that wall of worry.
Yeah, it's funny too, because rising market volatility boosts traditional safe haven assets like gold. We can see that over and over again. And so what I was saying earlier about how like market volatility, the VIX is usually not good for Bitcoin, and how it is for gold. That's an interesting observation, and I think that's sort of the transition that we're waiting for. So yeah, the question about backed and introducing market volatility through physically settled futures and things like that, that's good. I don't know if it's going to be the catalyst that helps us make that transition to more of a safe haven asset that is correlated with being a place where you store value during times of market volatility. But I think it's the move in the right direction.
It's rarely ever one thing, right? It's rarely ever like we were looking last year. Oh, wait till the Bitcoin ETF comes along, and everybody's like holding their breath, like oh, Bitcoin ETF, and it never came along. And so now everybody's like, okay, backed, holding their breath for backed, and it's like it's not going to be like that. It's going to be one thing after another, after another, after another. It's like, and it turns into a landslide, right? It's just going to be. This is where the tipping point hits, where it's not just one thing, it's just a whole bunch of things at once.
We got an interesting crowd tonight.
We do. What are the most important BTC levels to the upside and the downside? Well, let's get to the chart. Okay, so let's so I would say right now as you look at this, one of the important levels that I'm seeing is, let's go with a different color here. Let's go with this one. I'd say this zone right here is very important from a support perspective. So 9100 needs to hold us from a support perspective. So I don't mind if I see 9500 undercut, which is going to be right there. If 9500 is undercut and it comes down and smacks us again. But as somebody in our Omnia channel recently said in a discussion group today, like, hey, how many times is it going to hit this thing before it breaks through that? So I've heard of triple bottoms, but I've never heard of a quadruple bottom, and that's the problem. When you bang on something so many times, eventually it's going to break through that level. So that's the one thing that we want to watch for. Now to the upside, it's quite easy. If it breaks above 11,000, say goodnight. This thing's gone. It's going to start to take off. It should break through that trend line the next time through. And I'll get back there. Oh, there we go. Okay.
Here we go again. Some good old Tether fun. Man, I'm feeling the warm and fuzzies from 2018 all over again. Yeah, Tether it's one of those like boogeyman things that people like to point at as, as sort of like Mount Gox, like, oh, that is the source of all evil in this market, and like how dare they operate how they do. And we just saw news this week that, like, Bitfinex is under the scrutiny of the New York judicial system, and there's a lot going on. There's a lot of pieces to that. I don't think it's controlling Bitcoin's price in any respect, at least like that directly, to say like, oh, if it blows up, it's going to nuke the market and things like that. I think we've matured a lot as a space in the last 2 years, and I don't necessarily correlate Tether to being the cause of why the Bitcoin market took off, nor why it's failed to perform or anything like that. It's a piece for sure. Certainly, it's integrated with a lot of exchanges out there, and that's, I mean, still concerning. It's still concerning how they run their business, and I do not support their business practices whatsoever, because they've shown over and over again that they have no consideration for their users. But at the same time, I think there's much bigger forces at play now, and Tether is just kind of a leftover piece from our past that will probably grow out of over the next decade. And yeah, there might be some short-term volatility associated with that, but I just, it doesn't keep me up at night. It's not the boogeyman to me. So yeah, let's see. DeFi happened in 2019 instead of FCO. It's really interesting. I've been talking about DeFi and SCOs for like a year-ish now, and to watch them all, both of those like sort of like micro spaces sort of start to become more of the common rhetoric is cool. Like, what they're doing is really cool. It's going to take a long time for them to mature. It's going to take a long time for them to really show that the value that they intrinsically have. And I hope it's also apparent to people that it's not this like 1,000 times moon mission. Like there's definitely going to be some value that's generated from this. It's not the ICO. So just bear that in mind, both DeFi and SCOs. What it is more consistent, more reliable value that's coming from things like equity. When you're investing in an SCO, you're investing in equity. You should be. It's not always. You have to read the terms and conditions, but what terms and conditions? Geez, PPM. You have to know what you're investing in. But by and large, it is a very different animal. Both of them are very different animals than what the previous spaces. And again, like, this is a transition period. This is us moving towards something, away from something that's good. It's healthy for the space. DeFi still needs to prove itself. I feel it is the buzzword of 2019. There's no doubt about that. But I think it still needs time to really show that you can have a decentralized finance infrastructure and that it's not going to melt down or blow up. And yeah, actually, maybe this is the like perfect time for something like that to come along. The video I made today about like the tech focused banking initiatives that are going on right now, like Monzo and Revolut, like it's clearly that is the clear direction and trend of consumer preference. And so to have something a little bit more, user friendly, DeFi kind of represents giving control like throughout a lot of financial services to the common user. That could be really interesting. But at the same time, like what they kept talking about at consensus this year is like the DeFi is also really scary in the fact that like you're giving people the ability to take out these sort of loans and like what's backing all that up. And like, yeah, sure, there's collateralization, but like you're dealing with market forces that are just kind of nascent by nature. And so you have to be really careful with that. And you're competing against the industry that's been doing this for hundreds of years, so like they've got the protections in place and they have the expertise. So that's always going to be the challenge. It's always going to be an uphill battle. But at the same time, like everything that they have to lose, we have to gain. And like, as we show over and over again that we're about consumer choice, consumer protection, data protection, giving people absolute power over their finances, the financial life, whatever, that I think is the compelling nature of what we do. So anyways, it was a good question. I kind of went on a soapbox with that one.
Hey, I'm going to pick up this one from Chase, and here you go. All right, so I'm looking at Ethereum versus the U.S. dollar right now, and so what I've done here is instead of looking at the RSI Laguerre, which was we brought up the RSI Laguerre. So if you're wondering what this study is, here this is the choppiness index, or what we call the fractal energy indicator, overlaid with the RSI and Laguerre time. So this is one of the studies that we brought up in the futures class, which of course is available through Omnia. And but one of the things that I talked about in the short-term trading strategies class is use of the MACD for understanding divergences. And as I'm looking at the price action for Ethereum, what I'm seeing here is, let's draw a little bit of a trend line here. So we have the price kind of crawling down this descending trend line. So right now the price action is bearish on Ethereum. But what I do want to show you guys is that don't fall asleep on this one, because what we have is pretty strong Class A divergence. So we have lower lows in the price, and we have higher lows on the study, which is the MACD histogram that I'm looking at here. So this is where you look for, this is a leading indicator that shows that momentum to the downside is slowing down. So you're going to look for a couple of things to happen here. So first of all, you're going to look for the price to break above 200, because that's the last lower high. You're also going to look for the price to break through this trend line here, because rule number 3 of the fractal energy program that we have is that descending patterns break to the upside. So you're going to see these two things happen at the same time. So that would be a breakout trade to go long on Ethereum at 200. So right now, Chase, for your question, to respond to it, I would say Ethereum is bearish, but it's showing bullish divergences to that, which is a leading study. It is not a study that you can trade based on. So a divergence study is just something, or a divergence read on a study is just something like it's an early warning to say, don't fall asleep on this one, because you can see price move very, very quickly when too many people jump on something like this way too late in the pattern. So perhaps, I'm kind of disappointed in what Ethereum has done over the last couple of months here. I mean, here's a rising star. Just 2 years we were talking about flippening, and this thing has just been a dog ever since. So that doesn't mean it can't be traded in the short term. And we actually have futures available. Futures and options are available through Ethereum. By the way, I just got my options course finished, completed, done. Yay. Next question.
Yeah, I think we get this common sentiment about like what is the future of altcoins and like things like Ethereum, and hopefully it's clear to you guys that we say this over and over again. Like we're bullish on Bitcoin right now, purely from the sense of like it is the best in terms of a global hedge. Its use case right now is to play against gold and just market volatility and things like that, and that's awesome. Like what it's going to do over the next couple of years is going to be really interesting and really exciting, just from a like discovery phase and like a transition phase, and watching Bitcoin go through a recession or recession-like environment for the first time is cool. Like we're going to learn a lot, and it's going to be exciting stuff. Ethereum and the rest of the space still has a lot to prove, and that's clear from like many different levels. And that is not to say that like I discount them or throw them out, because we still have lots of potential with this space in terms of the different use cases, the different industries that we can participate in and impact and disrupt. But it's going to take time, and generalist platforms like Ethereum need time to perfect things. I mean, the common meme today is like Ethereum 2.0 when, like, and you just saw Vitalik talking today about how he's getting burnt out on layer 2 solutions because he doesn't find them to be easy or viable or anything like that. It's a long road for Ethereum, and it's a much shorter road right now, at least for Bitcoin, in terms of like profitability or returns or anything like that. It just they're playing two very different games. So it's almost disingenuous to lump them into the same markets at this point. I think we have to treat them as different animals, and that goes throughout the entire industry. We're just in a divergence of like what crypto is, and as I think what defines this next 10 years is the stratification in terms of like going off into DeFi, going off into STOs, going off into micro industries, and then being a part of the larger emerging technology space. What does Web 3.0 look like? What does AI and IoT and blockchain together look like? Like these are the things that get me really excited. So that to me is the future of decentralized networks like Bitcoin and Ethereum. And I hope we'll be part of the conversation once we get past all this like market fears and global slowdown rhetoric, because there's a lot that's coming. There's a lot of excitement. There's a lot of technological progress that needs to occur, but it's going to happen. Like betting on the future of technology is one of the best bets you could possibly make, because it's indicative of the human spirit, and like our innovation is just part of who we are. So we're going to look to build a better and more efficient and more egalitarian system. And I think blockchain is going to underscore a lot of that. So anyways, so long-term bullish, short-term bearish, if that's what the answer you want.
Hey guys, we're going to be sticking around here for another couple of minutes to take your questions. I wanted to just a quick shout out to those of you that have made the switch over to our new Omnia service. So we did a sale a couple of weeks ago with it's under readysetcrypto.com/options-sale. So a number of you actually signed up for 3 months and got Omnia for $66 a month, which is an awesome price. So I wanted to welcome you on board and hope you guys are happy with a lot of you are like drinking out of a fire hydrant right now with the amount of content that we have out there. But we have something for everybody. We have kind of a fundamental track, which is more of Mav's content. We have more of a trading track, which is more of mine. And then, of course, we have our phenomenal, fantastic discussion community that's out there, which is there's a lot of very sharp cookies that are part of the service. So we do a good job of making sure it's going to be a good fit for people. And then it's not just us, it's the community that counts to us. So if you've thought about joining, this is actually a great time to join up, and then you can all you can eat for for 3 months would for a very low price. So check that out if you get a
Yeah,
chance.
yeah, and it hopefully it sort of underscores like what this channel is and where we're looking to take things, because I've often felt that it's a mistake to look at this space and like talk insular and be like, hey, what's that hot new altcoin? Tell me about that cool ICO that's gonna moon. And it's like, okay, that's fun for a little bit, but does that actually push the envelope further? Does that actually like help us get integrated with a larger market? In a lot of cases, no. And that's been a maturity thing for the space, and it just we are moving in a direction that is more macro in scale. It's going to be more complex. It's going to be harder. It's just going to go in a lot of different directions. But that's also an opportunity. For every challenge, there's an opportunity, and that's what Omnia and Ready Set Crypto aims to represent. Is like the future of this space and dogs, apparently.
Yeah, that is my attack schnauzer, Archie the attack schnauzer.
Oh my. So yeah, I we're in a transition period both as an industry but also sort of as a channel as we look to bring you guys the best. Like what we want to do is push this space forward. That's always been the mission of this channel. That's always been the mission of our business, is to like do so in a trustful way, in an honest way, and like do it in a way that isn't shilling stuff, isn't like, taking advantage of your trust. Like we want to provide a space of trust. And so you can ask the sort of questions and get the sort of answers that you deserve. It's hard. It's super hard to be part of a like like innovative space like this, to be the first ones, leading with the flag and be like, where do we go? Like who do I trust? Like where do I get my information? Who do I talk to?
But by the same token, there's so many patterns that repeat,
Yeah.
and that's what I do. Is like when I was taught engineering, basically we look for patterns that we would identify. Whoa, there's a damped oscillation, or there's an overdamped, those kind of things. We square wave, sine wave, things like that. Here's harmonics, here Fourier transform. This is really just an extension of that, is identifying patterns in space, and patterns are due to human nature. Human nature so far does not change. Even if we have trading bots out there, even if we have AI, guess who taught them? The AI. So we're seeing a lot of the same things that have happened over the last 10, 20 years, just based on human nature, and just understanding how to plug into that and adapt to the patterns and not get taken for a ride. I think is the important thing too, is to look through this and really comb through and make sure that we're not just jumping on board a bandwagon coin, which you're going to hear about a lot of stuff. It's just, who needs that kind of crap?
So Doc, where did you learn to trade? I think that's a great question.
Oh, there is not one single answer to that. And this is what I teach within my program, is that the way I learned to trade was to aggregate. Like I borrowed something from this guy, and I liked the way that this woman did something, and I liked this dude's approach, and I liked this guy's mindset. And then when you wrap that all together and then you figure out your own limitations and liabilities, and working through your own limitations and liabilities, you learn about yourself a lot, because you have to get over your own self-imposed limitations to be able to get anywhere with this. So it's a journey, right? So it's one of those things where it's like, you're not going to just buy a program off the shelf and next Monday you're going to be like, hey, I just made a $20 million trade. It does not work that way. What's that commercial like? This is not how this works. This is not how any of this works, right?
None of this, yeah.
It's like, but like there's so much marketing out there, like to try to, hey, get rich quick and everything. So it's a journey. That's what I'll say without bloviating too much here, is that, and it's a journey that I've enjoyed every single minute of it, because there's always a light at the end of the tunnel. There's always something interesting to learn. Oh, let's see. Mav is no, Mav is not turning into a Sith. He is Thor.
Come on.
Mr. Penguini, I wonder if you could provide some clarification for the LRSI for the fractal array. Oh, well, where that's what is the movie? There's a great movie. It's called Sicario, and there's a great line from it where the main character says, "Oh, you're asking me to tell you how to build a watch," and that's kind of what it is. It's like that's probably a 2-hour conversation, but it's let's put it this way: you'll see moves within moves, and there'll be an identical pattern of each other. And this is the next book I got to write, which is the fractal energy trading book. I got to get it done because I think in book format it actually would be very, very helpful. So if Mr. Penguini, if you're an Omnia customer, what I would do is I would start digging into the fractal energy trading class, and hopefully that'll keep you busy for a little bit, because I think that's 15 modules.
If you could just like
I know Kung Fu. I love that line. That's so great.
Whoa.
All right. Any last questions, guys? We don't want to keep you too late here. Yeah, I'd love to. I tell you what, maybe sometime what we'll do is in a Ready Set Live, I'll give you guys just kind of a quick 30 to 45-minute session on how to apply the 4 rules of fractals. So if you can apply the 4 rules, they're very simple but powerful rules. So maybe that it's time for an encore for the 4 simple rules of trading, and that would probably answer a lot of questions. So, okay, I think we have reached the time here. When you can take this from my hand, it is time for you to go. So thanks everybody for hanging out with us here tonight. Ready, Set Crypto, Ready, Set Live. You will next see us, next week. And then you'll see us in Bali. All right. Thanks, everybody. Have a great night. Thanks for hanging out with us. Join us in the newsletter. Join us in the newsletter, in the free newsletter. Check it out. Thanks, guys.
See you guys. Thanks for hanging out.